Hello, traders. You are welcome to another episode. How was our week? I hope we all made money because if you follow my analysis for last week, by now you should be happy. Yes, we got it again this time. Like I've always told my mentees and people that are following me, what you need to do is to know the direction of trend, then do your technical analysis very well. And once you get it right, fundamental analysis, all this news and all that, we always align. They will facilitate the process of you reaching your TP. It's very clear. Yes. Now, this is a technical analysis of GBPUSD weekly viewpoint, our weekly viewpoint. So now we need to first of all establish directional bias. We need to know our directional bias. When we say directional bias, we are simply saying where is the trend headed? Is it going south? Or is it going south, which is a bearish trend, or is going north, which is bullish trend, or is it just in a consolidation stage? So we need to first of all establish the direction of our direction of the current trend. So the second point we need to know is where we were as in the previous week. Last week, where were we last week? We need to first of all also look at that. Then the third point is where we are presently. At this moment, where is the trend? Where have we gotten to? Because price action don't just move. It moves from one point to another. That is what we should know. It does not just move anyhow. It moves from point A to point B, from point B to point C, from point C to point D. All right, that is how price action moves. We need to know where we are presently. Now, the last but not the least is the focus for next week. We need to know where we are headed, where we are now going. At this point that we have identified, okay, we are now at this point, where are we now headed? So before we continue, if you know that you have not subscribed to our channel, please do. And for you to join us, join our team, just inbox us, go to this site www.againstfx.com. You just join our community. All right, contact us, just contact us. All right, so that we can train you. It's very simple. We will teach you how to trade effortlessly. Then apart from that, as you are following us, gradually, you will know how to trade, and before you know it, you will now stand on your own and be trading. So in trading, you don't depend on anybody. The best way you can even learn trading after somebody has mentored you is for you to now trade on your own. Where you make mistake, you now mark it. Where you had a success, you will now mark it. Then you have to now improve on yourself. And by so doing, you will get it right. All right. And apart from that, for you to know the news for next week, you just need to visit forestfactory.com. You go to the calendar, you know the news for next week. So without wasting time, let us start. Now, our directional bias If you go to daily time frame, all right, you will notice that we are still very much bearish. All right, we are still very much bearish. How did we know that we are bearish? You can see price action breaking structure to the downside, breaking structure to the downside. So if you are a smart person and you know what you are doing, you will understand that the daily leg has been taken out. Because once price action turn and is breaking structure to opposite direction, because before it was bullish, now it started bearish. All right, after a change of character, you now see price breaking structure. The previous strong low or strong high, you now see price breaking them, violating them. And once it start breaking them, it will continue to push to break all the structure down until it get to a final bust stop. It will now turn, then you start going to another direction. You will now change direction. And before that happens, it's going to do what we call, it's going to give us a pattern showing that okay, this trend is finished. Then we are now set to change direction. That is how we know that the trend is exhausted. Now, once you give us a pattern, we start, changing our directional bias. You can see the daily leg has been violated. Now, what we should be expecting is the weekly leg. The weekly leg is where the price is pointing to. All right. Now, this is a little advanced, but if you follow me, you get it very easy. We now know that we are still very much bearish. All right. At this point, we are still very much bearish because price has not given us any heads off that it wants to start going bullish. All right. So when we move straight to our normal time frame where we do our daily execution, which is 1 hour. You can use 15 minutes, I don't care, but I prefer to trade on 1 hour time frame. I hate noise. All right. Okay, at this point, we need to establish we have established number one, our directional bar. We are bearish. We are still bearish. All right. How did we know? Because price action has been breaking structure to the downside. Break of structure to the downside. All right. Now, where we were at the previous week, we need to first of all identify the point. Now, price action on the 2nd of January, that was on Thursday, he broke this structure down. All right. Once it got here, all right, then he created a low. We now tagged it weak low. Then this one here that broke the structure down, we tagged it as strong high. You guys remember. Then we now saw that there was a bullish rally, a moment of cool off, which is normal, a moment of cool off, or you call it a retracement move. And I did told us that on no account should price action breaks this high because it's a strong high. He has already done his job by creating a low, by breaking structure to the low, by breaking structure to the downside, and he created a low. He has already done his job. So if you want to follow the order flow, price is not supposed to take out this high. So what were we expecting? We are expecting price to move, to continue to go bullish until at most 79%. All right, at most 79%, which he did. He moved from here to this point, he created a high. If you had entered from here, what will happen? Price action would have pushed you out, it would have stopped you out. Does that mean that you are not right? You are right, but the only problem is that you entered early. You entered early. I've told us, just be patient. Allow price to be ready before you get in. If you have entered here, you should know that once you take position, your stop loss should be above the structure. Note that. Always have that at the back of your mind. Any time you are placing your entry, your stop loss you should always be are above the structure. That is why you need to be patient for price action to give you the real entry before you jump in. If you had entered from here, if you enter from here, you can imagine the stop loss gap is too high. So you should know that price action, for the price action to get to this point, there will be a moment of relief. It will come down, it will break this structure because he know that early sellers would have taken position, so that once they take position thinking that price has reached its peaks and is trying to resume the underlying trend, which is the bearish trend, once you enter, price will trick you. You enter. This one here is for early sellers, all right, early traders. But if you had entered and you decided to put your stop loss above structure, is safe. But what you notice is that a little drawdown, then before price resume the underlying push to the downside. So what happened? He created this for people to jump in, early traders who are not really patient enough. All right. Then he now created a structure. He now broke the structure. You can now see he now gave us a perfect evening star. All right. Now, after giving us this perfect evening star, all you need to do is, because he has already showed us a bullish candle, a bearish candle, I beg your pardon, does not mean you should jump in. No. Let this first bar market close, then let the second candle open, the bearish candle, followed by another bearish candle. Because once you see that other bearish candle, you will see a move, a volume. You will notice that a volume has stepped in, all right, because of the push. If you want to even be very, very conservative, you entered. But me, as a guy who knows that, okay, at this point, I am not expecting price to push above this place. Even if price later push up to 100%, it should not break it, because this guy here will surely dish out a sell. So what will now happen is that immediately gave this point, I entered because I know, yes, it's done, sure. And because I now my entry was here, my stop loss level was perfectly above structure. So it was safe. I didn't even panic, nothing. Then the next thing, you now notice a break of structure, a change of character. Then after a change of character, a little push, then you see a very aggressive push to the downside. And what happened? This structure was taken out. The last low was now taken out. Yeah, at the end of the day, you can now see our first target was hit, our first TP was hit, and our second TP was now hit yesterday, being Friday. You can see 61.8, negative 27.0. I've told us negative 27.0 is our first TP, second TP is negative 61.8. All right. When price got to, after breaking structure, when price got to this point, what happened? It created an ascending triangle. Ascending triangle, meaning that there will be a moment of a little relief. You think maybe price action is going bullish. You cannot see a little ascending. It just go up a little, then it now breaks out of the channel. All right. Then after breaking the channel, it broke structure. All right. It came down. What happened again? It created another ascending channel. It came down, pushed up a little. All right. Then because of that NFP, you guys notice, I told you guys, if you know what you are doing, fundamental analysis will always align with technical analysis. So you don't need to panic. Me, I did not even care. I know that price action will even, that news will facilitate the process of price action getting to my TP target. All right. The first target was hit, negative 21, negative 27. Then I was okay. All right. If you check, you discover that how many pips did we get from here to this point? 296 pips. Guys, you can see. Now, when I saw this ascending triangle, when I saw this ascending triangle again, then I took another position. All right, I took another position from here, and you see, for the news, it hit my second TP, which is negative 61.8. You can see. And guys, for the fact that this one here now, you can now see this is a descending triangle. A descending triangle simply means that the price is coming down, but it will start rising. All right. So you don't need to panic when you see that price turns from here, because first TP hit, second TP hit. So what you should be expecting is a bullish run to the upside. All right, a bullish run to the upside. Then before price will resume underlying trend again. Does that happen immediately? No, it takes time and patience. All right, it takes time and patience. But as far as I'm concerned, the daily leg has been violated. Now, the weekly leg, this is the weekly leg. The weekly leg needs to go. This is the weekly leg, guys. This is the weekly leg. The daily leg has been taken, is remaining the weekly leg. Now, the weekly leg has to go. All right. So we are expecting price action to come and take out this weekly low. The weekly low needs to go. But will that happen immediately? No, it takes patience and a little time. So where we are currently is this point, all right, that we are approaching the weekly leg. Now, because of time, our focus our focus for next week is that we are still very much bearish. We are still very much bearish. All right. We are still very much bearish. You can see this guy here is what? A strong high. Why is it a strong high? Because it broke structure. All right. A strong high because it broke structure to the downside. You understand? Because there's a break of structure to the downside. So we should be expecting a little push to the upside before price will resume its underlying trend. So the overall focus is that we are still very much bearish. Thank you so much and enjoy this next week. God bless you.